Look at the chart. There was a Hail Mary right at the end. They almost got it going for 13, and today will be 14. So we're talking about desperation to, make everyone believe that things are great when everything is falling apart. And at the same time, the reason you said, it can't go through 1250. Well, it's not 1250 that they're worried about. It's 1260 because 1260 represents the 200-week moving average. And that's exactly where gold was yesterday when they smashed it at 12 o'clock and the day before. And, that was exactly where gold was trading the night of the election. And by the way, silver's is 1860, which is also where it was trading the night of the election, where it was right up against the last 2 days. So that's the line in the sand because, you look back at when gold had been above its 200-week moving average, from 2003 on, and it finally was knocked below on exactly April 12, 2013, which has happened to be one day. That's one day after that unprecedented closed-door meeting that Obama had with all of the top too big to fail bank CEOs, Lloyd Blankfein and Jamie Dimon and Moynihan. All of them, they met behind closed doors. That very same day, Goldman Sachs came out brazenly with a aggressive short sale recommendation on gold. And then that next day, gold was hit and silver by like 10% out of the blue for no reason. Actually, they were talking about, there's going to be an exit strategy for the Fed, which, of course, 4 years later, we haven't seen. And at the same time, if you look at the charts, I put one in yesterday, the complete decoupling of the Dow Jones propaganda average with hard economic data was April 2013. So whatever happened behind the closed doors was something of such urgent desperation about taking over markets that it's I can't even comprehend what it is that they were so worried about that particular moment in time. But here we are 4 years later, we have record gold and silver demand, crashing currencies the world around, the worst economy of our lifetimes. Now inflation is surging. Production of gold and silver is unequivocally declining, and inventories have never been lower. And these gold and silver are both on the verge of retaking their 200-week moving averages at the same time. And this is as we're heading into, as we talked about last week, the Ides of March with the debt ceiling debacle. And the Fed's got to meet, and now they're talking about raising rates, which will destroy the economy and the world and create trade and currency wars like we've never seen before. And, of course, the Dutch election, followed by the 15th of March, followed by the French election a month later, and then the Italian elections, a Catalonian secession, the Greek Brexit, the German election. So, it's really a confluence of events like we've never seen before in history, being masked by the greatest manipulation of financial markets in the history of mankind. And, and we definitely want to talk about what's going on now with the Fed and their hawkish talk of the last few days.
Hey, and don't forget the elites love these dates. Okay, they love the dates, superstitious dates, repeating dates like 9/11, like 2/22, all those types of things. They love that. So if something's going to happen, that it's going to happen on that type of date. So I would say, just be prepared. I'm not saying anything definitely will. I'm just saying that's the way that they operate.
Well, look, all I could say is this, we talk about conspiracy theories out there. And, for instance, like Vic Swear says there's a grand plan to take down the economy. And, I don't necessarily believe that. I don't, there's no proof of it. I mean, anything's possible. But when you see this, whatever has transpired in the past few days, it's like I've been talking about 2.5% on the 10-year Treasury bond forever. I wrote 2.5%, enough said, 6 weeks ago. And because the rates topped out there back in December. And as of yesterday, we were in the low 230s. I mean, we're about to break support from the post-election era. And all the hard data stinks. I mean, man, look at this horrible construction report that just came out just minutes ago. Down a whole percent. It was supposed to be up. Of course, it's not. It's never up. All the hard data is down. The trade deficit I wrote about today in the strong dollar catch-22. This trade deficit came in January, in the first quarter, or January, as the biggest trade deficit since August 2008. So you have all these bad things going on at the same time, the things that would make the Federal Reserve terrified of raising rates, let alone with all these elections and the debt ceiling coming up. And yet just yesterday afternoon, the market closed at 4 o'clock Eastern, and we have Trump's speech a few hours later. And then all of a sudden you have this barrage of Fed presidents with their Fed speak, not saying we need to consider March meeting live and everything. And yeah, I know the inflation numbers are up, partly in large part because the oil PPT relentlessly pushes the price up despite the most horrible oil numbers you can imagine. I mean, yesterday, another surprise jump in inventories to an all-time record for gasoline and crude oil. But again, you have them come out right at the close, right before Trump is speaking. And Trump, as you know, has said the dollar is too strong and it is killing us, which it is. That's why you've had corporate earnings down for 6 straight quarters. And at an historically vulnerable time for the corporate sector, particularly the retail sector, which is literally imploding. I mean, if you saw Target's earnings yesterday,
so
they come out and say we're going to have these. We're talking about the live meeting in March, and so the dollar surges, and then of course Trump speaks and there's all hype, and he said absolutely nothing. You could have put Barack Obama or George Bush in there. It was pure platitudes, absolutely meaningless speak, because he's not going to get anything done. He didn't even put out plans, because he said, I can't even do a tax plan until I have a healthcare plan. I can't do a healthcare plan because it's too complicated. And of course, we have the debt ceiling coming up, so you can't do a fiscal infrastructure plan, all this stuff. So anyway, after he speaks and nothing happens, the dollar creeps back down, and the interest rates creep back down, but then they surge higher. And of course, it's all meaningless anyway, because Europe is on the verge of collapse. And I mean, as we speak right now, the euro is about to break through its 15-year low, en route to breaking its all-time low after that. And here we are this morning with the dollar surging again, which got to piss off corporate America and piss off Donald Trump. Interest rates, they're not to 2.5, but they're at 2.46. And so it's going to kill the economy again. And then, of course, the Fed has to meet in a few weeks. And so, there's something being set up here to be really, really ugly, because the world cannot handle higher rates. The world cannot handle a stronger dollar. I mean, and of course, you're going to see the Chinese will immediately restart devaluing the yuan, and eventually we'll have to do the massive yuan devaluation we all know is coming if the dollar goes any higher. I mean, geez, I saw today that China is laying off 500,000 of its workers in some of the resource sectors. I mean, we're talking about an implosion over there, and they are going to devalue. So I look at this and I go, what on earth is going on behind the scenes over here? I mean, are we trying to commit? Are we literally trying to commit suicide? Because I think, looking at what I see, that's the only logical guess that I can make.
It's life imitating Big Swear, right?
Yeah. And by the way, is anyone watching Bitcoin hitting a new all-time high this morning?
Yeah, pretty amazing, huh? What's it up to, 1236?
Yeah. Well, right now it's at 1230, and so it's only $10 from the gold price, which again, a lot of people in our sector get all mad about it, like that's not possible. How could it be more than gold? It's not more than gold. There's 16 million shares outstanding of Bitcoin, and there's 1.5 billion ounces of gold, whatever the number is. But it is symbolic, and it will generate debate. Obviously, there's here's another, talk about conspiracy. Obviously, this Bitcoin ETF, well, there's 3 of them. And the first one, the Winklevoss one, which is the one that gets the most hype, that one has a due date by the SEC of March 11th to get a decision whether it goes forward or not. And then there's another one 2 weeks later, and then there's a third one after that. And obviously, if it goes through, it's going to generate a tremendous amount of interest and buying into it from the mainstream, because, they want to buy anything that's going up, whether they know what Bitcoin is or not. And I've said from the beginning, I mean, it would be insane for the SEC to allow this thing to go through, because it's the major competition. I mean, the way I put it, it's more competition to the dollar. It will be seen that way than even gold is, because gold to me is a storage of value. Bitcoin is going to be seen as money.
Yeah, you know what it will enable them to do? They'll be able to sell it short. Yeah, that's the name of the game here. Like, let's sell unlimited shares, because, once you can sell it short, then you can naked short it, because that's what the big brokerage houses do, the big banks. They'll short it an unlimited amount of shares of the ETF. And then what's that going to do to Bitcoin?
Well, but again, look, and this was the argument about GLD and SLV, which came out in 2006 and 2008, respectively. And I remember way back when the whole community in gold and silver was like, oh, we need this thing. We can't wait. It's going to make demand soar and everything. And, when they came out, it didn't do anything initially. Gold and silver did initially soar after that, but I think that had far more to do with the fundamentals of the time, starting with the financial crisis and then the second crisis in 2011. You had the U.S. was stripped of its credit rating, and all the European crises, which of course are much worse now, and they will be back with a vengeance shortly. But yes, to this day, there's many that think it was allowed only because it has enabled them to short it more. I mean, you look at the prospectus, they can encumber it, they don't have to audit it. It's held by J.P. Morgan, the silver one. So there's some truth. There's some truth to that, and obviously, the Bitcoin community is thrilled that the Chinese have gotten rid of margin on those big exchanges in China, so that there's not much margin out there anymore, and therefore it's a lot more freely traded. So people will say, well, yes, maybe they're allowing it because they want to short it, but I think they're going to find in Bitcoin it's a lot more difficult to deal with than gold and silver. It's decentralized. It's much harder to find the Bitcoins out there. They're far more scarce than ounces of gold and silver are. So I think that honestly, it'll certainly create more volatility in the price, but I think it's going to be a fatal mistake by letting this thing go public if they do, because anything that they could do on the shorting side is going to be dwarfed by the fact that the mainstream is going to be allowed into this thing for the first time. Look, you could have bought gold pretty easily if you were a big financial person back then. It's not as easy to buy Bitcoin in size now as it was to buy gold then. So I think it's going to open a can of worms, which ultimately is going to backfire in the powers that be if they let this thing go public.
Well, we're going to find out, I guess. Definitely a mistake to allow these ETFs. Big mistake.
Well, look, they make so many mistakes. That's the funny thing, that everyone thinks that they're in control. Look at the state of the world right now. Look at the political regime changes. Look at the crashing currencies. Look at the imbalances, the debt, the historic policy uncertainty and social unrest around the world. And there's just so many, and then of course, as we talked about the major changes going around in the world. Like, again, we talk about this retail apocalypse. Like, you look at Target, right? Target, just their earnings yesterday, it was so horrible. It was one of the worst earnings reports ever. And their outlook was as bad, was so much worse than anyone could have predicted. And a large part of that is the changes going on in the retail industry, where everyone is going online. And people don't realize it. And then you see the other day, Wendy's has announced it is putting 1,000 we're work at we're talking about there's going to be hundreds of thousands, if not millions of layoffs in the retail industry. I bet in the next 5 years, we're talking about millions. And this is the only sector, according to the government's own statistics, where you've had any job growth since. And now they're increasing the minimum wage, which means there's even more pressures on that sector.
And you know what? There was just an article the other day. I'll have to post it on my site on Financial Survival Network. Robotic baristas are coming. And, all those guys at Starbucks better start thinking of new employment here, because they're coming. And
it's not like, and again, Starbucks, the guy who runs it, he's just a disgrace.
Howie Schultz
guy,
Schultz,
total Hillary Clinton-like liberal, crazy.
He's going to hire 10,000 refugees. Instead of 10,000
it's a sweatshop. The people there, they could be all proud that they're baristas at Starbucks, but they still make no money. They produce the most overpriced product that no one wants, and now it'll be replaced by robots anyway. And it's just the whole. Starbucks is just so symbolic. It's such it's like the peak idiocy of society is what Starbucks represents right now, because it's such an unsustainable business model of overpriced coffee, with these baristas that get paid too much. Everything about that meme is going to change. And I think, again, we have so much that it's like a train hurtling at us like thousands of miles an hour. And there's so many things that could just cause the crash to start.
Yeah. Cascading. And that's just one area. And then they're coming out with, don't forget, the driverless cars and trucks and buses. There's a driverless bus coming out in 3-4 months. And so now the robot will slam the door in your face when you're just about to get there, right?
Yeah, trucking is the biggest industry in the entire country. And again, of completely, and again, it's not insulting people specifically, the most unskilled labor you could possibly have. And it's the biggest industry in the entire America after fast food, waiters, which is, again, completely skillless, that can be done by robots.
Hey, just think what it'll do to amphetamine consumption when there's no truck drivers. right?
Well, yeah, I mean, and again, now you can have medical tricorders that are coming out, so people won't need to go. People don't even realize, when you think about how silly it is, how many people go to doctors for so many ridiculous things that they don't need to do. When you can when you'll be able to self-diagnose this. I mean, these things are going to be on the market soon, and you throw that into the cataclysm of Obamacare and whatever it's going to turn out to be 8 years from now. Because again, as I said, it's not getting repealed, and Trump has pretty much said that he has no idea what he's doing, and then of course you have all the other issues, the tax reform, and all these things are all dependent on Obamacare. So again, all these things are changing so incredibly fast. It's beyond belief. No one can even afford healthcare anymore. So of course they're going to be in a hurry to buy these self-diagnosing things. I think of all the last times I've been to the doctor in recent years, and that includes for me and for my wife and for Sylvie. And I think all those times they were a giant waste of time and money. And of course, the industry itself is incentivized to waste time and money as well.
Let me tell you, you don't need a doctor's order anymore to get a blood test done. So you go to this thing, any test, anytime. They do the blood test. They send you the results the next day. And my cholesterol, I was trying this other thing other than Lipitor. It went up. I said, okay, that's not working. And I was trying something. I was trying flaxseed oil instead of fish oil. That didn't work. So I went back. A couple weeks later, got the test again, and all my levels were fine. So, I didn't have any particular maladies. So, I go one yearly for a physical, but otherwise there's no reason to go to the darn doctor.
Yeah.
It really wasn't. Unless I got a specific ailment, I'm just not going to go to the doctor and waste the money. I don't see the point of it. Other than the annual physical, I'm just not going to go.
That's right. That's right. All these things we've talked about lawyers too. I mean, all these things out there that are changing.
Stay away from that.
But aside from the secular changes, which we've discussed before, and you can go to my audio blog that says, I think it was titled something like A Shocking New World, whatever. I talk about this constantly, and you talk about it too, and I'm sure you have other guests that talk about it. But the giant pink elephants in the room are the debt and the value of the dollar. The debt is exploding. And again, I look at the yield, we're up to 246 right now. And, you go years ago, I wrote 3.0% and upset in early 2014 saying over 3.0% in the 10-year yield. That's the level of interest rates that everything crashes. And sure enough, it was the top, and it plunged all the way to 1.3%. Here we are just 3 years later, and 2.5% is that level, because that's above that level. When you had that spike, you see the crash in all the interest rate sensitive industries like the mortgage applications and the refinancing applications and the housing starts and all that stuff. And that's where we stand right now. And I'm sitting there going with the Fed where, when March is a live meeting, and you're pushing rates right up there. And by the way, if they don't go over 250 again, especially after March 15th, let's say the Fed raises rates and they can't and the market rates won't go up, then that something is really afoot, because the deflationary forces are really going to kick in. And part of it is because everyone knows it's going to cause the Chinese to devalue the yuan, which will be like a giant deflationary tsunami washing over the earth and washing over the Fed like it doesn't even exist. But again, the debt is so enormous, 20 trillion. And by the way, that debt ceiling is going to be fixed in place on March 15th, just 2 weeks from today. I mean, everything collapses at higher levels of interest rates, which is why this whole Fed thing is so insane. And again, you see the dollar, it's up like a point in the last day. I mean, again, everyone's watching it. I'm looking at the euro. It's within 0.8 cents of a 15-year low, and I see all the other currencies starting to crash again, and the yuan is starting to go down again as the offshore yuan starts to speculate that the onshore yuan is going to be devalued. I mean, all these things are just bad. There's not a single positive thing that comes out of raising rates. And the funny thing is that, talk about trapping themselves. Inflation rates are soaring. I mean, part of it is because of the oil PPT trying to hold the price of oil up. But it's not just that, obviously. The oil PPT is not the reason why Germany just announced the high to this morning. It was the highest CPI that they've had in 5 years. We are at the highest CPI that we've had in 5 years. I just read in Spain, it's like 8%, their inflation. China's like 4 or 5%. I don't even want to ask what it's in a place like India right now. I mean, we're talking about massive inflation is taking over finally as the velocity is increasing from all that printed money over the years. And so, the Fed, the central banks theoretically have to raise rates, but they're so far behind the curve from what real inflation is. And of course, because of all the debt that's been created by years and years of low, even negative interest rates, they can't raise it because it literally destroys everything around them. And given that all the other economies in the world, which are crashing as much as us, but they don't hide it in their numbers, economic data as us, their currencies are crashing as it is. So the stronger dollar is only going to make that worse. And then they can't pay back their debts that they all have in dollars because all the bankers pushed it on them during all the emerging market strength times. So, I mean, again, I look at the cataclysm out there, and I think with the central bankers that they are possibly actually trying to destroy themselves. I should say the Federal Reserve, because if they attempt to raise rates and push the dollar up, let alone with Donald Trump screaming. I mean, he had the top 20 manufacturers in his office 2 days ago saying the strong dollar is killing us. We're going to create a level playing field because we won't let this happen. So, I mean, you talk about there's forces destroying the country from without and from within. I mean, and civil war politically, and and let alone because Trump has the ability in the next year or two to replace a lot of these Fed governors. So I can't even imagine what's coming.
Well, I think we'll leave it at that. So take a look at Andy's work over